Hello, and welcome to Virtual Investor Conferences. My name is John Viglotti. On behalf of OTC Markets, we're very pleased you joined us for the Battery and Precious Metals Conference. The first presentation is from Troilus Gold. And before I introduce our speaker, please note you can submit your questions for the presenter in the question box to the left of the slide. And additionally, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome our first presenter. He's Justin Reed, Chief Executive Officer and Director of Troilus Gold Corp, which trades on the OTCQX Best Market under the symbol CHXMF and on the TSX under the symbol TLG. Welcome back, Justin.
Good morning. Thank you for having me, and thanks to everybody for joining. My name is Justin Reed. I'm the CEO of Troilus Gold, and I look forward to presenting our project to you. As we flip through the slides today, usual cautionary language, and everybody can read that on their own time. And just to jump into Troilus, to remind everybody, Troilus was a past-producing mine. It operated for 14 years between 1996 and 2010, and it was operated by Inmet Mining. Inmet Mining was a global base metal company that during this period of operation really had their corporate objectives elsewhere, namely Cobre Panama in Panama and La Cruces in Spain. And right now, Cobre Panama is the sixth largest copper mine in the world. So as the mine ran out of reserves, very little money was reinvested into the operation. It was shut down. First Quantum bought Inmet. They started to close Troilus, and that was the opportunity. We came in 2016, bought it privately, and brought it to market in 2018. Jump forward to today. I'll talk to you about a company that has one of the strongest balance sheets in our space, in a great jurisdiction with 8.1 million ounces and growing, almost 300,000 meters of drilling, and we're moving towards developing one of the largest open pit gold mines in Canada, producing north of 250,000 ounces a year for over 20 years. As I said, we've done some smart deals lately, and I'll walk you through those, and we've had some really significant results, which I think are setting us apart. Cash and marketable securities, we have well over $50 million. What that means is that in this gold and precious metal market, where capital is very hard to get, unlike our battery partners, we have over 2 years of capital in front of us, so very low risk of dilution. We're located in Quebec, one of the best places to work in the world. Brownfield project. So this is not grassroots. We have over $350 million US of infrastructure that's significantly going to lower our capex. Big resource. We put a PEA out over 2 years ago, and based on some recent developments, moving straight to feasibility study for the back half of next year. Our team's done it before, and we are a leader in our industry in the ESG space, and we started that from day one. We're located up at the top right of this map of Quebec. We're in the Frotet-Evans Greenstone Belt. Below us is the Abitibi. Abitibi is one of the most prolific gold belts in the world, producing millions and millions and millions of ounces. We are essentially same rock, same age, same metamorphic grade, same structural continuity. Really, the difference being that we're buried under about 10 meters of till. And so exploration has been slow coming to the north of the James Bay, and that's provided a great opportunity for us. We had 1,400 square kilometers about 2 weeks ago after 3 years of exploration away from our main mine, which is our focus, both technically and with our capital. We sold almost 1,000 square kilometers to Sayona Mining. Sayona Mining is a $2 billion Australian lithium producer, or they will be in the next 90 days, operating in Val-d'Or. And then that little kind of turquoise dot at the end of our road is their Moblin deposit. And they needed ground to not only explore, but also lay down their mine. As such, an incredibly accretive deal for us. We sold non-core ground, which has a huge amount of potential, but wasn't a focus for us. We received $40 million in Sayona stock, free trading, $95 million a day of liquidity. So no problem monetizing if we need, no restrictions. We did a $10 million private placement at about a 30% premium to them. They are now our largest shareholders, and we maintain an 2% NSR, which has a $20 million buyback on it. So at that time, we were an $85 million company. We're about $120 million now. Incredibly accretive. And as I move through the other slides, you'll see in the current market, considering no discount and no warrants, which is kind of a perfect world, to raise this kind of capital, we would have had to put out at least 80 million shares. And so incredibly accretive to our shareholders. So capital structure, north of $50 million of working capital, well covered by the street, about $120 million market cap now, which is nice. We're coming off of the lows, and we kept our share structure fairly tight. So like I said, lots of runway ahead of us. I'll consider Sayona an institution. We're over 70% institutionally held. Very proud to have Sayona at about 9.3%. Great team, great assets. We're now partners, and the rest is other institutions, of which about 15% are Quebec Inc., made up of Investment Quebec, the Case, Fonds Solitaire de Quebec, and CHXMF. So great partners. Management and insiders maintain about 8% of the company as well. Team, we've been together for a long time. We've done this before, and we built a great technical team in Quebec as well, with a very experienced independent board. We have lots of branches in the forest to do everything we need to move this project forward. So the ground we've kept, our core, call it 400 square kilometers, encompasses the mine and some core exploration grounds. And I'll hit on the exploration before we dive into the project. Lange is north of the mine. Large grab samples. Really haven't done a lot of exploration to the north of the mine yet. Number 2, 3, and 4 are our core focuses. What we like. Bayan is very similar to Troilus, 8 kilometers down the road. Could make a 20-year mine, a 30 or 40-year mine. To start, at number 3, 6-ounce material and rock. Large channels within another intrusive that we found 2 years ago. Initial drilling, which is really just drilled for stratigraphy, and I'll show you, hit high-grade gold. A real focus for us. And then down at 4, it's near Sumitomo's Renault discovery, where they hit 30 meters of almost 9 grams. And we have a lot of potential there, and I'll show you that. So let's go to the start. Like I said, 5 ounces or 6.5 ounces an outcrop at the main showing. A major stratigraphic division and a shear zone between the ultramafics and the intrusives. And we put a few drill holes in, and these were really just to test what was the stratigraphic and structural context of the main showing. And we hit almost 8 meters of 5 grams and 1 meter of 20. So great opportunity here with lots of room. 6 kilometers to the power line and straight up to site. So that's going to be a focus for us going forward. Go down to Palador in the south. We identified a 4.5 kilometer brand new gold trend coming off of Renault. Soils are done, detailed geophysics are in. We have put some preliminary holes into it and are very excited about what we're seeing. We believe this is right on the route du Nord that comes up to our site, and we believe this is an absolute focus exploration target for us going forward. And again, adds better ounces to Troilus. But if we jump back to the main mine, you can see the J4 and 87 pits. That's where the 2 million ounces of gold and 70,000 tons of copper was historically produced. 2 years ago, we made a major discovery in the southwest, which is about 2.5 kilometers away, where in 1 month of drilling, about 8,000 meters, we added 600,000 ounces of gold at surface. Well, we've now drilled over 175,000 meters in the southwest. That's been our main focus. And I think you're seeing a footprint in the southwest very similar to that of 87 and J combined. So it's a truly pregnant precious metal province that stretches with over 8 kilometers of structurally controlled mineralization right at the mine site. Of incredible value in this inflationary environment which we're working in, where we see CapExes are going through the roof, and is the infrastructure that we've inherited. We have 40 kilometers of road, production ready, coming into our site from the main highway. To build that road today would be about $1.5 million US a kilometer. We have 60 kilometers of power line that's been restrung by Hydro-Quebec coming to our 50 megawatt substation. Permitted power, 3.2 cents kilowatt hour, hydroelectric already there. This is a huge value to us. That substation to replace is probably 40 million US, $1 million a kilometer for the power line. Then, even more importantly, we have septic, sewer, power, potable water for camps. We have a 100-man camp now. We can build up to 1,000-man construction camp eventually, 400-man operational camp. But we have a permitted tailings facility. If you assume 35,000 tons a day, which is a huge operation for 25 years, with some moderate lifts over the life on the existing tailings, we have life of mine capacity. In this world of delayed permitting, a brownfields disturbed site is of absolute importance or value. As well, a lot of the earthworks is already done. I'm going to go through some details now, but a lot of the cost overrun you're seeing isn't on fixed price items like trucks and mills. They're costing more, but they don't inflate. You have a fixed price, you have a fixed price. It's really on the earthworks, moving rock once, twice, clearing, preparing a site. A lot of the things that we need to do in the future are there. 2 years ago, before the inflationary window, we priced these savings out at about 350 million US. Today, I would argue it could be well north of 500, and that's certainly of immense value besides just our mineral endowment. Again, over 2 years ago, September of 2020, we had taken a resource from essentially 2 million ounces underground to 8.1 million ounces. That was on about 81,000 meters of drilling. We have since drilled almost another 200,000 meters. You can see the total there, 277,300, and expect two things. That growth is going to continue, making us one of the largest developing gold mines in Canada, but also significant infill drilling. And that infill drilling is really important because that's constructing the base of our reserve going forward, so from which a truly economic feasibility study can be produced. Here's the distribution of our drilling, really along the southern rim of the intrusion between the diorites and the ultramafics. This big gap area is extremely exciting, but also I just kind of want to point out the northwestern side of that intrusion. Very little work's been completed there. We call it the North Rim. I think it's going to be incredibly important going forward as well. Distribution of drilling, lots of holes there still, but certainly you can see us expanding the J and 87 and the southwest zone, and that's led to some major discoveries. And I'm going to spend most of my time talking about X22 and the connector zone because it's going to have a big impact on what Troilus does. Some of the best drilling to date. Southwest, as you can see, there's our footprint. So let's dive into X22. So there's 87 South and 87. This was the highest grade part of the ore body mined by Inmet over 14 years. And then a few months ago, all of a sudden, we found this D2 structure we call X22 coming off of the main ore body in the hanging wall of 87. So that's the lithology stratigraphically above the main ore body. Typically, it was never sampled by Inmet. It wasn't in the typical rocks that you would expect in C87, but all of a sudden, we hit 25 meters at 2.5 grams. Troilus is a 0.91 gram ore body, and to start seeing grades 2 and 3 times higher over material thicknesses at surface has a demonstrative impact on what the economics of this deposit could be early. Think about just putting more grade in early at the same cost of mining. We had, you can read them there, but 3 meters of 12 grams, 6 meters of 3. Then all of a sudden we had another 17 of 2. And then we had 46 of 4.4, a little bit deeper, but on that same structure. So this was drilled out over 300 meters. We're now drilling it out well over a kilometer. On the next slide, I'll show you kind of the footprint of what this could be. And there's this gigantic maglo. There's the 87 pit. There's the J pit to the top right. And this whole hanging wall zone, which is between the two pits, is giving us 2 or 3 kilometers of strike length to explore, all with the same signature. We're testing it now. I'm very excited by what we're seeing. Could have material impact. That ground is cleared. This mineralization is at surface. In fact, the road just kind of comes between the two pits, so easy for us to get to. Then let's jump to the connector between the two pits. And if you look at the diagram on the right, you can kind of see, again, this was an area that had been ignored. Our focus obviously was down the southwest. And again, it's this hanging wall to 87 and a zone that really hadn't been connected. And the models evolved. Originally, we were told there was nothing there from Inmet. It was interpreted as a fault between the two deposits. Then we put on a structural model. We said, hey, we think they're folded on top of each other at a local and regional scale. And then with significant drilling, we said, these are just stacked ore bodies. And who knows how long they last or how far they extend. And we're seeing that as it extends down the southwest. We think they continue. But all of a sudden, we had 91 meters of 1.1, almost 2 grams over 24, 138 meters of 1.7, and including 38 meters of almost 3.5, 3.6. And you can read them, another 98 of 1.3, 55 of 1.2. The reason I'm kind of targeting these is we're talking grades 2 to 3 times higher than the average grade of the deposit. At surface or within pit shells that had previously been given zeros for waste. This whole zone opens up a really new, incredibly important target for us, which basically said all that work we had done on pre-feasibility is valid, but the numbers were wrong, or our mining plan was wrong because we wouldn't have included any of this. If we can have the opportunity to increase the grade 2 or 3 times over the first 2 to 3 years, it could have a demonstrative impact, as I said. And then just back to some sections I've shown before, and we'll probably always show what we inherited in 2016 at the J, and what we're drilling out. So Troilus hasn't been cut off in any direction in any deposit because of lack of ore. It was cut off historically because of lack of drilling, and the more we drill, the more we find. For us, it's about finding great ounces now, and there's a whole bunch of releases. Same in the southwest. Brand new discovery, 600,000 ounces in 1 month, and now we've drilled a significant strike length, and you can see some of the best drilling. 73 meters of 1.6, 50 of 2. They're really high grade, Troilus high grade zones within this, so great opportunities to expand. And then there's even higher grade components, and we've shown this. It's really associated with secondary cross-cutting structures, brittle deformation, and Troilus always was operated at about a 15% positive grade reconciliation. Very tough to model, but these kind of intersections show you where that grade came from. 7 meters of 20 just being a great example. 20 meters of 4.4. So these structures are identifiable. They're now predictable, and we can replicate them section after section. So very important as we go into a mine plan. Just to kind of wrap things up a little bit as I go through the final slides. This is our PA. It's over 2 years old. Gave the board and our management team confidence. We have to keep going on. Previously, we looked at a 14-year mine life going underground. When our feasibility comes out, expect a 20-year plus open pit mine producing 250,000 ounces of gold, between 20 and 30 million pounds of copper, and about 1 million ounces of silver. All those dots are going up because of capital, but certainly Troilus has a scale, and I think that's one thing that's important when majors are not replacing reserves. Scale is important. Copper, we're going to be one of the largest copper producers in Eastern Canada. Not a lot of copper, but as a strategic metal, between $3.50 and $4 a pound, adds about 15% or accounts for about 15% of our revenue. And it's a very important mineral in Canada going forward. So that leverage is great for us. Met work, we didn't do bench scale work. We ran full pilot plants. This mine operated for 14 years, and we went in and we did 10,000 kilos of samples, and we're basically seeing in all zones gold and copper was around 90% or better. So excellent results, low technical risk. Feasibility study is underway. A lot of things we did for our early engineering over the last 2 years was at a feasibility study. We bought back the royalty. You're going to see a new resource in early Q1, which is going to show continued growth, setting the stage for the year. We didn't lose any time by going straight to feasibility. Permitting federally and provincially is underway. Stakeholder outreach is underway. Most importantly, our capital is in incredibly good shape to manage any delays that always occurs in permitting. So Troilus is on track there. ESG, when we started the company, we put a full team in place led by Catherine Stretch, and 2 big events of 2022 for us as we kind of wrap up the year. We engaged Tuklik Energy to look at what it would take for us to launch in a zero carbon environment and or develop towards that. So really important working with them. And we are the first company, development exploration company, under $1 billion market cap to be accepted into the UN Global Compact, which was a huge feather in our team's cap. So congratulations to them. So cash is great. No risk of dilution. Lots of catalysts. 3 to 5 rigs drilling. We're slowing down for Christmas right now. We'll ramp. Quebec's a great place to be. This was a past producing mine. There's low technical risk. Copper is a great additional leverage, and exploration continues. So really happy with where we are. I'll say thank you. I've got a whole bunch of questions in the next, call it 6 minutes. So I'm just going to start going through them and answering them. And if I don't answer your question, there is our contacts, and please reach out to me, Blake, Carolyn, Ariana, whoever, and we at our team, we'd be happy to answer. So first question, I'll just go through them in order. Can you speak of the background history of the brownfield site? Why did prior owners walk away in 2010? It was all, great question, by the way. It was all the market at the time. They invested no money into the infrastructure or into the reserve. And their focus, their capital was at Cobre Panama, a $4.2 billion plus build, 6th largest copper mines in the world. And they were a copper company, so it was priorities. And at that time, low grade bulk tonnage in the gold market was crap. The Canadian dollar was strong, and as such, it was a marginal deposit. Gold was, $580 an ounce. We're at $1,800 an ounce now. So really, I would say economic conditions and corporate priorities. I've seen this question before, and I disagree, but I'm going to address it because that's a great opportunity. It says, looking at CDI, which is where we file our selling, I see a lot of insider selling. There wasn't a lot of insider selling at all. In fact, if you look at it, we just had our SUs vest for the entire team. We had been in restriction for 6 months. And when they vest, it's compensation. So you have to pay tax on it. And so I actually know what the exact number was. It was $200,000 or change for my entire team of insiders selling for tax. I personally wrote a check of over $150,000 to pay for all of my tax. So there was actually no selling. There was minor selling in one block that crossed that was facilitated by a broker just to pay tax. So everybody's keeping their core position. So that was a misinterpretation by the market. What is the timeline for the development of your copper assets? Well, in line with the gold. As per the layout that I gave you, and I can actually just shoot back. One more there. New resource beginning next year. Lots of results of all of the X22 and the connector through 2023, culminating in a feasibility study and a revised resource again at the end of 2023. Working on approvals. Provincial and federal approvals are our best estimate working with these bureaucratic bodies. And if anything can slip, that's it. Those are completely out of control, but that's our best estimate right now. And so really, we would love to start breaking ground 1.5 to 2 years, which seems like tomorrow. Things move so fast, but that's a really good question. And I said there was lots of questions. That was it. There were just kind of 3 good questions. So we have a couple minutes left. I'd just like to reiterate that our whole team is available to anybody at any time. And thank you for your attention, and thank you for participating in today's presentation. I look forward to updating everybody in the future. Thanks to virtual investor conferences. That's it for me. Have a great day, everybody.